Welcome back, and joining us for a look at the equity space is Viv Govender from Rand Swiss Offshore. Viv, thanks so much for joining us today. Now, markets are on course to end the week higher on the back of those strong first quarter earnings that we've been seeing, but the conclusion of the Fed meeting clearly showing that interest rates will remain higher for longer. What have you made of the commentary we've seen from Powell? He has shut the door on rate hikes. He's also refuted claims about stagflation. Just take us through your thoughts.
Well, I mean, firstly, the shutting the door on rate hikes. If you look at the start of the year, the chance of a rate hike was virtually zilch. It would be like meeting a person, and the first thing they tell you is, "I've never killed anybody." So it kind of makes you wonder why are they denying it so strongly. And so this is the kind of situation you have here. The fact that he has to deny it means that it was becoming a problem. And I wouldn't put it as zero. I mean, if you look at objectively, the US right now has a growth rate that, most economists would say is above the normal growth rate on average of the last couple of years. They would say that the current unemployment rate is below what full employment is. So that means there's too many people employed, and unemployed people, because there's a shortage of workers in the US. We're seeing wages rise. We are seeing inflation not just above 2%, but above 2% and possibly showing signs of rising. Those things together don't make the chance of rate cuts zero in a normal environment. Maybe it's the political year. Maybe it's the fact that the Fed is being like kind of put into a corner about cutting rates, sometime soon. But I think objectively, a rate hike is not, out of the question. The second question is, what's the US economy looking like? And I think right now, the signs are still quite strong. We're going to get the non-farm payrolls numbers today, and that's going to give us a further, confirmation or not about what the future for the US looks like.
And I know that growth is slowing, but it's still strong. And as you said, that labor market really, really strong. Now, sticking with monetary policy, it's quite clear that the Fed, is having a tough time to keep a lid on inflation. And so we're not going to see rate cuts anytime soon. However, things in Europe are quite different. It seems like they're on track to cut rates in June. Well, that's according to most economists, right? Now, I was reading an article earlier, and one of the economists was quoted saying that Fed and ECB divergence on rate cuts could spell trouble for the euro. Let's get your take on the imminent move that people expect from the ECB.
Well, I mean, the European economy is far weaker than the US economy, and therefore much more, viable. If you look at the objective stuff in the EU, I would say that it would indicate that it's more amenable to a rate cut situation than the US is right now. Growth is slower, unemployment is rising in places like Germany, and for instance, we're seeing a high number of people unemployed now than the previous period. And inflation is not as bad as it is in the US, and it's obviously looking a little bit better. So I think that is more amenable. The problem is that what happens is if the European Union cuts and the US doesn't, the yield in the US relatively becomes higher than the European Union, the euro weakens. And then the European Union basically will be facing inflation being imported via things like, energy and so on. And that might be an issue for them, especially now that you consider the fact that a lot of the energy supplies from places like, Russia are basically gone. They are importing from the Middle East, they import from elsewhere, and those places denominate their energy in basically dollars. So it's going to be negative for them in terms of inflation from that point of view. I do think, however, that objectively the European Union can cut. We in South Africa objectively probably could be looking at cutting as well. Unfortunately, we are even more vulnerable to that whole currency movement that the European Union is.
Now, let's take a look at some company results. Earnings season is in full swing, and the tech sector is still under the spotlight this week. I think we had 2 of the magnificent 7 stocks reporting earnings this week. Let's start off with Apple. Now, they were out with numbers. Top line did decline. Sales for our iPhones were also down. But I guess the big news here was that share buyback program that sent the share price up. What did you make of that move and the results?
Yeah, I mean, when Steve Jobs was around, they would never give me money back because he always thought he could do more with the money than you could. You know what I mean? He was a better handler of money than you were. That being said, I do think that, quite frankly, it's becoming more of a commoditized company. They're more of a mature company. I think the latest thing they did with the Vision Pro, I don't know if you saw the stuff about it, incredibly expensive. I'm talking about close to 100,000 rands for a pair of VR goggles. They did say it was more for a developer kind of thing, but still, we're talking about an incredibly expensive piece of equipment out there. And that had a big splash initially, but then it was like it kind of died down very quickly. They haven't had a replacement after the iPhone, but even the stuff like the iPad, the AirPods have done really well. Those kind of things have done well, but the iPhone remains such a huge dominant tools part of their business that is almost entirely an iPhone business. They are having difficulties with regards to some monopoly kind of questions in the US around their pricing at their app store, which is very, I think, important going forward because it's a huge source of revenue. So I think it's a maturing company facing some issues going forward. So we can't expect the growth rates in the past that we've seen, like the last few decades or so going forward to the future. It's just too mature, and I think it's had difficulty, adjusting to the new environment.
Let's move over to the mining sector. Now, things are heating up there. According to Reuters sources, Glencore has its sights set on Anglo's assets. These are just rumors, of course, as Glencore has not made a formal approach to Anglo. This, of course, comes after BHP's offer was turned down last week. Now, it's interesting times for the mining sector, Viv. What are your thoughts around this potential bidding war in that mining sector?
Okay, there's a question I want to know is BHP looking at Anglo miners Kumba and Anglo Plats because of South Africa, or because they don't like copper, they don't like iron ore and platinum, and they want to focus on copper. Now, copper is a huge play going forward. I'm quite involved in the whole AI space, and you'd be amazed at how much energy is being demanded by the data centers that are out there being created right now. I mean, they're almost doubling every couple of years, and they're already a couple of percentage points of US total energy demand. In places like Ireland, they're like almost a third of energy demand, and they, like I said, doubling in a period of 3 years or so. So that's a huge amount of energy coming into the system. And then you look at things like driverless cars, which are working with electronic vehicles, looking at things like robotics, which sounds science fiction-y, but quite frankly, a lot of money is going into that. If that ever becomes real, a lot of copper, a lot of energy for that as well. So copper could really be, a really boom commodity going forward. And this kind of makes sense to what's happening right now around this space.
All right, Viv, before I let you go, let's just get your stock pick quickly.
ASML, these are the guys that make the machines that are used to make computer chips. I have a virtual monopoly of the highest end computer chips. You have to have ASML machines. The Chinese, for instance, are only able to make their current highest level machines, or chips rather, using machines that they basically have somehow gotten a hand of from ASML. So if we're looking at AI taking off like we think it is, the last set of, like I said, earnings from every single tech company is pointing to huge spend on AI. Microsoft is talking about $100 billion. Then a lot of that money is going to flow eventually through to ASML. So that's my pick for the week.
Viv, thanks so much for your time and those insights. I hope you have a lovely weekend. That was Viv Govender from Rand Swiss Offshore.